Welcome back. The American dream feels out of reach for most Americans. That's according to a new Wall Street Journal poll. It finds only a small percentage of Americans are finding it easy to own a home. This, as new analysis by Redfin shows, 8.5% of U.S. homes have an estimated value of $1 million or more. This is a record high, more than doubling from the 4% recorded before the pandemic. The latest housing data shows home prices overall hovering around record highs, existing home prices hitting a record high in June and only pulling back slightly in the month of July. The Peebles Corporation founder, chairman, and CEO Don Peebles joins me now with more. Don, great to see you. Thank you so much for being here.
Thank you.
I know it's different regarding the regions that we're talking about, but overall, how would you assess owning a home today, home ownership in America?
Homeownership today is elusive to most Americans. If you look at what's happened with interest rates today, it's more than triple the cost of buying a home. And then the price of producing housing continues to increase. And that's one of the big reasons why most young Americans believe that the American dream is out of reach for them.
What can they do about it?
Well, I think the first thing is that we've got to get rid of inflation, and we've got to significantly bring it back down, real inflation. And the number one driver that's affecting Americans is the cost of capital. And so interest rates really need to go back down. I'm hopeful that in September, the Fed will do a 50 basis point reduction and start the ball going the other way. Mortgage rates are declining, but also the cost to produce housing in the most difficult, troubled housing markets, say New York City, Washington, D.C., San Francisco, Los Angeles, where the biggest affordable housing crunches are, the cost to produce those housing units is significantly above markets, say, like Texas, for example. And so it makes it very difficult to meet the demand of housing, and then it continues to push up the cost of housing.
Yeah, let me dig into some of these areas. You mentioned New York City, and I want to look at the real estate market there in terms of the supply versus the demand, because we're seeing an economy slow down across the country. What specifically are you seeing in New York City?
Well, one of the things that's happened in New York City is because of the inability of the state legislature and the governor to really come up with a meaningful tax incentive plan to do mixed income housing. You see occupancy rates at record highs and vacancies at record lows because there's not much new supply coming online. And that is running rents up to the highest levels ever in New York City. And so that makes housing much less affordable. And at the same hand, the condominium market and the co-op market, for example, the for sale market in New York City, especially Manhattan, is continuing to be sluggish because of the high cost of interest rates. And so therefore people are pulled in both directions to where they can't afford to rent, and there's not much inventory to rent, and then they can't afford to buy because interest rates are very high.
Well, I mean, the sticker shock of rates for your monthly mortgage is causing some people to say, look, I've got to walk away from the mortgage. I can't buy this house because I can't afford the monthly payments. And then they go to rent and they get sticker shock renting as well. Do you see any alleviation in rent right now? Because that remains one of the issues with the inflation reports we're looking at every month.
Not for a while. I think the big challenge is that previously home buying took pressure off the rental inventory. The rental inventory has been insufficient to meet demand in cities like New York, for example, and Manhattan in particular, for quite some time. But potential renters were able to look at buying homes because the cost of capital, say in the Trump administration, for example, was exceptionally low and allowed them to buy homes for the same price or the same overall net cost of what it would be to rent. And sometimes it was less expensive to own than it was to rent. Now, the cost of ownership is nearly double what it would cost to rent.